Hello everyone. Welcome to series of webinars on advanced taxation organized by ACCA. Today is day 3 of the ATX webinar and I'm your tutor OS Mirchawala. As you all know that we have been discussing the June 2022 exam in this webinar. On the first day we completed our question number 1. In the yesterday's class we were done with question number 2 and we started question 3. Today, we will complete question 3 and also complete the question number 4 so that our complete paper of June 2022 paper is done. As you all know that it is less than 1 week to the exam, and I told you at the start of the webinar series that your approach in the last 1 week should be doing more and more past papers. You should do more past papers on the CV practice plan of the ACCA, and I told you people that in this webinar we'll complete one paper and we'll do question 1 or 2 of one more paper. And then I sent you the link which is available on the ACCA YouTube channel and also on my YouTube channel, also available, which were conducted by me in the previous attempt. You should do 2-3 papers, at least 3 papers with me, in which I discuss the complete paper, I draft the complete answer, and then you should attempt the mock exam and send me for the marking. I hope that you are following the approach and you all know that you should be doing the revision through the summary notes which I provided to you people. All the documents are available on the handouts tab of your webinar. You can download it from there, and if you were not available in the previous classes, you can message me and take it from my WhatsApp group or from my personal WhatsApp chat also. Okay, so let's start the today's session, and we'll be starting with question number 3. I want you all to concentrate on it. In the previous class, we completed part A of the lease. I hope you all remember the working of the adjusted cost and the calculation of the gain. Then there was also discussion on holdover relief and we made workings on it. Today we are starting with part A2. We read this part in the previous class, but we didn't started its working because it was already late in the previous class. So today we are starting with part A2. Let's read the requirement again, and then we will read the relevant part of the question also. Just a second. In relation to the chargeable gain calculated in part A1, explain with supporting calculations the extent to which rollover relief will be available within the Fox Limited Group and the minimum amount which Fox Limited need to spend on the new freehold factory. Just a second, some students are complaining about the voice issue. Let me change the network connection. Okay, I have changed the connection. Is my audio clear now? Please confirm me. Okay, so what we were discussing was part A2 in relation to the chargeable gain calculated in part A1. Explain with supporting calculation the extent to which the rollover relief will currently be available within the Fox Limited Group. Now, if you look at it, in part A1, we calculated the chargeable gain of 91,849. We calculated the chargeable gain of 91,849. He's asking the extent to which rollover relief will currently be available within the Fox Limited group. And the minimum amount which Fox Limited will need to spend on the new freehold factory such that the full amount of the eligible gain in Part A1 can be deferred. So let's go and read the question again, the relevant parts, and then we'll start attempting it. Now, this was the structure of the group. Fox Limited owns 90% of the shareholding of Bravo Limited, 100% of the shareholding of Salis Limited, and then 80% holding of Coro Limited. So first of all, we need to determine that which companies are part of the Fox Limited capital gains group. Can you people tell me in the chat box that which companies are included in the capital gains group? Can anyone tell me which companies are part of the capital gains group? Fox, Bravo, Salis, Coro, which companies? So many students have replied, all the companies are part of capital gains group. For capital gains group, the requirement is 75% ownership in Bravo and Salis. In Bravo and Salis, the shareholding is 90% and 100%. In Bravo and Salis, the shareholding is 90 and 100. So that satisfies all the conditions that direct is more than 75 and indirect is more than 50. When we talk about Coro Limited, the direct ownership is 80%. And if I calculate indirect, 90 multiplied by 80. So indirect will be 72%, which is also more than 50%. So first of all, companies within capital gains group of Fox Limited are, which companies are part of its capital gains group? Bravo Limited, Salis Limited, and Coro Limited. Okay, now let's explain the rule first. How they are part of the capital gains group. Let's explain the rule. Okay, for capital gains group, direct holding should be 75% at least, and indirect holding should be 50% at least. Okay, Bravo Limited and Salis Limited are direct subsidiaries of Fox Limited, and Fox Limited owns 90% in Bravo Limited and 100% in Salis Limited. Owns 90% in Bravo Limited and 100% in Salis Limited. This satisfies requirement of capital gains group. In case of Coro Limited, direct ownership means the step ownership. The direct ownership is 80%. Direct ownership of Bravo Limited is 80%, and indirect ownership of Fox Limited is 80% into 90% is 72%. This satisfies holding requirement. This satisfies direct holding requirement of 75% and indirect holding requirement of 50%. So first of all, see the extent to which rollover relief will be currently available within the Fox Limited Group. So first of all, I need to establish that what the Fox Limited Group includes. Please listen to me. First of all, I need to establish that which companies are part of capital gains group. Companies within capital gains group for Fox Limited are Bravo Limited, Salis Limited, and Coro Limited. For capital gains group, direct holding should be 75% at least, and indirect holding should be 50% at least. Bravo Limited and Salis Limited are direct subsidiaries of Fox, and Fox Limited owns 90% and 100%. So when you directly own 90 and 100, this satisfies the holding period requirement. In case of Coro Limited, direct ownership is 80% and indirect ownership is 72%. This satisfies the holding requirement. So first of all, I have established that the capital gains group exists. First of all, I have established that capital gains group that the capital gains group exists between these companies. Now, on 1st October 2021, Fox Limited assigned a 26 years lease to an unconnected company for £180,000. Now, this was the disposal on which we calculated the gain in previous class. See, in relation to the gain calculated in part A1, so A1. So, capital gain, listen to me, capital gain on disposal of lease done by Fox Limited on what date? Done by Fox Limited on 1st October 2021. Done by Fox Limited on 1st October 2021. Done by Fox Limited on 1st October 2021 can be deferred if Fox Limited itself or any company within its capital gains group makes a reinvestment in a qualifying asset within qualifying period. I will repeat again. Capital gain on disposal of lease done by Fox Limited on 1st October 2021 can be deferred, can be rolled over if Fox Limited itself or any company within its capital gains group makes a reinvestment. Now, qualifying assets for rollover relief are land and building and plant and machinery. Okay, so these are the qualifying assets. Qualifying period is 12 months before and 36 months after. It is 12 months before and 36 months after the disposal date. In case of Fox Limited, qualifying period will be, now you will go back 12 months from October 21. You will go back 12 months from October 21. Will be 1st October 2020 and 3 years later. So 22, 23 and 24 to 1st October 2024. So look at it how I am drafting the answer. Many students say that, sir, we get confused. We cannot understand the requirement, what we should be doing. Look at the approach. This is the reason why I draft the answer with you people. See, it is very easy for me to just open the examiner answer, and read it with you people. Okay, but I draft the answer with you people so that you people can understand how I pick up the requirement, how I start the answer. The goodwill is not included in rollover relief when we talk about companies. In companies, the intangible assets are assessed separately. Okay? In companies, the intangible assets are assessed separately. In individuals, the goodwill is included. Okay? So see how I'm drafting the answer. The extent to which rollover relief will be currently available within the Fox Limited Group. So first of all, I established that who is included in the Fox Limited Group. First of all, I established that who is included in the Fox Limited Group. See that how I develop the answer. Normally, what the tutor do is he just opens the answer and he say, okay, you'll do this, read this. That will never give you a good understanding. Learn how I develop the answer. There is the word Fox Limited Group. So let's establish that who is included in the group. Then there is word rollover relief. So let's establish that how the rollover relief will operate. Now, the extent to which the rollover relief is available. Now let's talk about the extent to which the rollover relief is available. Disposal proceed on sale of leases. What is the disposal proceed? Disposal proceed on sale of leases 180,000 and the gain is 91,849. Disposal proceed on sale of leases 180,000 and chargeable gain is 91,849. Okay, now this is the disposal proceed and the gain. Let's look at the scenario. What is the amount of reinvestment? Let's look at the scenario. What is the amount of reinvestment? The lease had been acquired by Fox Limited in October 2007. The lease factory was used by Fox Limited for trading purpose. Fox Limited sold an office building on 8th March 2007. Now, this was an older thing. Fox Limited claimed rollover in order to defer the gain on acquisition of the lease. This is something older. This was the gain which was deferred against the purchase. Now we are talking about disposal. Fox Limited plans to purchase a new freehold factory in July 2022. We don't know its value. Coro Limited acquired a warehouse on 1st July 2021 from an unconnected company for 168,000. Uses 70% building for itself. The remaining 30% is rented out. So now the reinvestment is done by one of the capital gains group company, Coro company. Reinvestment is done on what date? Is done in warehouse on 1st July 2021. Reinvestment is done in warehouse on 1st July 2021. Okay, it is done in qualifying asset. Warehouse is the land and building, and it is within qualifying period. Okay, because the qualifying period was from October 20 to October 24. This was the qualifying period. July 21 is within the qualifying period. July 21 is within the qualifying period. Okay, now reinvestment is done in warehouse on 1st July 21. It is done in qualifying asset and it is within qualifying period. Now, business use portion of reinvestment is how much? 168,000 into 70%. You can read it here. 168,000 is the total reinvestment multiplied by 70%. 168,000 multiplied by 70%. Reinvestment portion, business use portion of reinvestment is 117,600. Are you getting it? Disposal proceeds, chargeable gain is 91,489. Reinvestment is done by one of the capital gains group company, Coro. It is done in warehouse on 1st in 21. It is done in qualifying asset and within qualifying period. Business use portion of reinvestment is 117,600. Now, after reinvestment, cash in hand will be, what will be the cash in hand? 180,000 minus 117,600. What will be the cash in hand? 180,000 minus 117,600. So the cash is 2,400. Reinvestment is 62,400. Now just listen to me. The extent to which the rollover relief will be currently available. Now after reinvestment, the cash in hand is 62,400 pounds. Now if you remember the working of rollover relief, your gain was 91,849. You will claim rollover relief and you get the value of chargeable now. The chargeable now is lower of two things. The chargeable now is lower of two things. Gain, which is 91,489. 91,849, if I'm not wrong. Yes. And cash in hand. What is the cash in hand? 62,400. So the chargeable now is 62,400. What is the value of rollover relief? Which will be the balancing figure. Which is the balancing figure. I will repeat the things again. Just listen to me carefully. The things will get clear. What is the balancing figure? 29,449. See, let me repeat it again. Believe me, this is easy working. This is a working which a student of skills module can also do. This is a working which a student of skills module can also do. I'm not talking about advanced text. It is a working of skills module. Let's see how I am developing the answer. The extent to which the rollover relief will be available within the Fox Limited group. So first we are establishing that who is included in the group. First we are establishing that who is included in the group. Who is the part of the group? First we are establishing that who is included in the group. In Fox Limited group, there is Bravo, Salis and Coro. Then the word is rollover relief. So we establish the qualifying assets and the qualifying period. We establish the qualifying assets and the qualifying period. Then the extent to which the rollover relief is available. So I said that disposal proceed is 180 and gain is 91,849. We calculated it in part A1. We calculated it in part A1. Disposal proceed and the gain. Reinvestment is done by one of the capital gains group company, Coro company. It has done reinvestment in warehouse on 1st July 21. Now 1st July 21 is in this range. So yes, it is in the qualifying period and it is a warehouse. So warehouse is a land and building. It is done in qualifying asset and within qualifying period. Now let's look at the business use portion. The business use portion is 70%. It was written here because 30% will be rented out. So after reinvestment, the cash in hand is 62,400. The gain is 91,849. The rollover relief is the balancing figure. The rollover relief is the balancing figure. Chargeable now is lower of two things, the gain and cash in hand. The gain and cash in hand will get chargeable now. I hope you all remember the rule of rollover relief. Okay, if you don't remember, just press find and you'll go to rollover relief. In individuals, we include goodwill also. In companies, we don't include goodwill. If partial reinvestment, then lower off will be chargeable now. Gain and cash in hand. If business is used for non-business purpose also, then rollover relief on business use portion only. Okay. So chargeable gain is 91,849. Rollover relief is the balancing figure. Chargeable now is lower of two things. Now let's see what else he's asking. The minimum amount which Fox Limited will need to spend on the new freehold factory such that the full amount can be deferred. Okay. So what is the minimum amount which it has to spend more? Fox Limited has to invest at least 62,400 pounds more. See, my friend, one student is saying he should reinvest 180. From 180, 117 is already been reinvested. What is the additional reinvestment? Fox Limited has to invest at least 62,400 pounds more so that cash in hand falls to zero and chargeable now also becomes zero. In that case, whole of the gain will get rolled over. See, one of the student was saying in the previous class that, sir, I get confused in these type of requirements. Believe me, this was not a difficult requirement. Believe me, this was a requirement which even a student of skills module can do. Why do people get stuck? Because you people don't follow the approach. Always read the question carefully. The extent to which the rollover relief will be available in the Fox Limited group. So first of all, I established that who is included in Fox Limited group. First of all, I established that who is included in the Fox Limited group. Until and unless I will establish that who is included in the Fox Limited group, I cannot claim the relief. So first, I establish that in the Fox Limited group, it's a capital gains group. We are talking about rollover relief. Then there was a word rollover relief. Then there was word rollover relief. So I established that how the rollover relief operates. First, the capital gains group, then the rollover relief. Then we moved forward. We said, okay, now let's look at the workings. The disposal proceed is 180 and the gain is 91,849. The disposal proceed is 180 and the gain is 91,849. Now, who has done the reinvestment? The reinvestment is done by one of the group company, Coro Limited. Reinvestment is done by one of the group company, Coro Limited. So we said, okay, there is a situation of reinvestment. There is a reinvestment. So we said the reinvestment is done by one of the capital gains group company, Coro Limited. Reinvestment is done in warehouse. It's a qualifying asset. It's a qualifying period. It was clearly written here that 70% will be used in the trade and remaining 30% will be rented out. Okay. So we said, okay, 70% will qualify for rollover. And then we said, okay, after reinvestment, cash in hand will be 62,400. So chargeable now will be lower of two things. There is a chargeable gain. The chargeable now will be lower of two things. The chargeable now was 62,400. The balancing figure was rollover. Now, the second part was the minimum amount which Fox Limited will need to spend on the new factory such that the full amount of the eligible gain can be deferred. So if you want to defer the entire gain, make sure that this cash in hand falls to zero. This cash in hand falls to zero. Fox Limited has to invest at least 62,000 pounds, 62,400 pounds more. So that cash in hand falls to zero and chargeable now also becomes zero. Okay. See, one student is asking that, sir, what is the sequence? Like in every question, we should be following this sequence, or what is the standard approach? See, what you need to understand is the examiner has not defined any standard approach. But what you people do is that you people get stuck in the examination, that your mind stops working. And you people say that, sir, we cannot understand the requirement. So for that, my advice is that start picking the words. There is Fox Limited Group, explain the Fox Limited Group. There is rollover relief, explain the concept of the rollover. And then move towards the working. In that way, you will be able to cover the maximum marks. One student has asked that, sir, if I would have missed this business use portion working, how much marks should be deducted? Maximum 1 mark. Maximum 1 mark, not more than that. Okay. So if you would have missed, it's okay. No problem. No problem. Okay. It happens. But in my opinion, you shouldn't be missing it because it was very clear here that he uses 70% for the trade. But still, it happens in advanced test. You may miss some point. It's okay. It will only cost 1 mark. Okay. So till now, this question has been very easy. Till now, this question has been very easy. We calculated a simple gain. Okay, we calculated a simple gain. There was commentary on holdover relief, and then this rollover relief working. Believe me, it was very easy and very much straightforward. We first established the capital gains group, we commented on the rollover relief, and we did the working. As stated by one of the student in the chat, so the conclusion is that earn the easy marks. Earn the easy marks. Don't waste your time on difficult marks. And my advice, don't go for perfection. In advanced text, you cannot go for perfection. You will forget some of the things. Don't get worried. When you go for perfection, your time gets wasted. You run out of time. Okay? Whenever you feel that you are getting stuck, just read the question. Okay, there is Fox Limited group. This is the group. There is rollover relief. So this is the rollover. We are about to defer the gain in part A1. This is the detail of the gain. Then there is reinvestment, and we completed the part. Is it clear? Anyone? If there is any query, please ask. Is it clear? Anyone? Any query? Okay, let's move forward. Let's move forward. Part B, 9 marks. Explain the group relief claim. Explain the group relief claim available to the Fox Limited Group in respect of Salis Limited trading loss for the year ended 30th June 2022. How many marks? 9 marks. I want you all to participate and help me develop the answer. Please participate with me. Okay, which loss are we talking about? Which loss are we talking about? We are talking about trading loss. We are talking about trading loss. So which group you will form? Everyone, we are talking about trading loss. So will you form a capital gains group? No, no, no. For trading loss, we form a 75% group. We form a 75% group. Okay, so let's go and look at the question that with whom we have a 75% group. Fox Limited, Bravo Limited, Salis Limited, they are part of the 75% group. But when I look at Coro Limited, the direct ownership is 80. But what about indirect? What about indirect? 90 into 80. The indirect will be 72%. At 72%, we cannot form the 75% group. So let's form the group first. Let's form the group first. In order, or Salis Limited trading loss can be surrendered to Fox Limited Group, through 75% group rules. So let's form the 75% group. For 75% group, direct holding should be direct holding and indirect holding, both should be 75% at least. Okay, in case, or I would say in Fox Limited 75% group, companies included are Bravo Limited and Salis Limited, as Fox Limited directly owns them with shareholding of 90% and 100% respectively. Okay, in Fox Limited 75% group, companies included are Bravo Limited and Salis Limited, as Fox Limited directly owns them with shareholding of 90% and 100% respectively. Coro Limited is not part of 75% group, as indirect holding of Fox Limited in it is 72%. Why 72%? 90 multiplied by 80. 90 multiplied by 80 is 72%. 90 multiplied by 80%. So, please listen to me, everyone. Explain the group relief available to the Fox Limited Group in respect of Salis Limited's trading loss. So first of all, the trading loss can be surrendered through 75% group. For 75% group, direct holding and indirect holding, both should be 75% at least. In Fox Limited, 75% group, companies included are Bravo and Salis, as Fox Limited directly owns them with shareholdings of 90 and 100%. So yes, these companies are part of the 75% group. Coro Limited is not part of the group because indirect holding is 72%. Is it clear? Everyone, please respond. Okay, let's move forward. Let's move forward. Let's look at the question. This is the detail about Salis Limited. Let's look at it. Salis Limited was incorporated on 1st July 2020. Was wholly owned by an individual prior to joining the Fox Limited Group. Incurred a trading loss in the year ended 30th June 2021. Has no other sources of income in any accounting period. There are no plans to change the nature or conduct of Salis Limited's trade. Salis Limited is expected to incur a tax-adjusted trading loss of £225,000 in the year ending 30th June 2022. Now, there was one important information in the question. We acquired Salis Limited in April 22. We acquired Salis Limited in April 22. Now, Salis Limited will make a loss of $225,000 in the year ended 30th June 2022. So there is an issue of pre-acquisition. There is an issue of pre-acquisition and post-acquisition loss. Okay? Fox Limited, Bravo Limited, and Coro Limited will each have taxable total profits in the year ending 30th June 2022. These companies have always been profitable in the past and will continue to be profitable in the foreseeable future. Now just look at it. Salis Limited's expected trading loss of Salis Limited's expected trading loss of $225,000 in the year ended 30th June 2022 will be divided in two portions as Fox Limited acquired Salis Limited on 1st April 2022. Salis Limited's expected trading loss of $225,000 in the year ended 30th June 2022 will be divided in two portions, in two heads. Okay? First portion will be pre-acquisition trading loss. First portion will be pre-acquisition trading loss of 9 months. First portion will be pre-acquisition because the year end is June 22 and we acquired in April. So April, May and June are with us and 9 months are pre-acquisition. First portion will be pre-acquisition trading loss of 9 months and other will be post-acquisition trading loss of 3 months. Okay, now this was very important information This was very important information. If you would miss it, then you may lose half of the marks. Because if you would miss this information, you would miss the entire comment of pre-entry loss. If you would have missed this information, you would have missed the entire comment of pre-entry loss. Salis Limited's expected trading loss of 225,000 in the year ending 30th June 2022 will be divided in two portions. As Fox Limited acquired Salis Limited on 1st April. First portion will be pre-acquisition and other will be post-acquisition. Okay? Pre-acquisition trading loss, of Salis Limited of 9 months of how many pounds? 225,000 pounds divided by 12 months into 9 months. How much amount? 225 divided by 12 into 9. 168,750. Pre-acquisition trading loss of Salis Limited of 9 months of 168,750 cannot be surrendered to the group. I hope you all remember that pre-entry losses cannot be surrendered to the group up till period of 5 years. Pre-acquisition trading loss of Salis Limited of 9 months cannot be surrendered to the group up till period of 5 years. Okay? It cannot be surrendered to the group up till period of at least 5 years. Okay? Now, if you read the question, Salis Limited has no other sources of income in any accounting period. In any accounting period. Okay? Now, as Salis Limited has no other incomes, therefore this loss will carry forward to future periods. Okay, will carry forward to future periods. After 5 years, if Salis Limited is not able to utilize loss against its own income, then it will be surrendered, or then it can be surrendered to 75% group companies. Okay? There is no change in nature of trade. That's why it can be surrendered. If there would be change in nature of trade, then the loss would have got restricted. Okay? If there is change in nature of trade, then the loss gets restricted. Here it is written that there will be no change in nature of trade. If you change the nature of trade, then the loss gets restricted. Okay? So, first of all, I established the 75% group. We splitted the loss. We splitted the loss in pre and post. We splitted the loss in pre and post. Okay? Pre-acquisition loss is 168,750. See, I have written the response to your query. As Salis Limited has no other incomes, therefore this loss will carry forward to future period. This is not a pre-entry capital loss. Okay? It is a trading loss. In capital loss, there are rules of pre-acquisition gains and new gains from outside the group. Those are completely different rules. This is not a capital gains group. This is a 75% group. Okay? In 75% group, if there is a pre-acquisition trading loss, you have to use it yourself till 5 years. If you cannot use it for 5 years, then you can surrender to the group. Now, post-acquisition trading loss of Salis Limited of 3 months of how much? 225,000 divided by 12 months into 3 months. How much is it? So it will be 56,250 pounds. Post-acquisition trading loss of Salis Limited of 3 months of 56,250 pounds can be surrendered to 75% group companies, which include Bravo Limited and Fox Limited. We have already identified that the companies within our group are Fox, Bravo, and Salis. It cannot be transferred to Coro Limited. Okay? In the year ended 30th June 2022, Salis Limited can surrender trading loss of 56,250 pounds to Bravo Limited and Fox Limited if they have sufficient total income in corresponding 3 months. Okay, the loss can only be surrendered if they have sufficient income in corresponding 3 months. Okay, if there is no sufficient income, then loss will be carried forward, and in future years, Salis Limited can surrender loss to group after claiming relief against its own total income. See, these all are the rules which you have already studied. In current year, you can surrender directly. In current year, you can surrender directly. But in future years, in carry forward, you have to claim against your own total income and then you can surrender. See, this was a requirement of how many marks? 9 marks. Believe me, if you just remember the rules of 75% group, if you just remember the rules of the 75% group, they were easy marks. They were easy marks. If you just remember these rules. First, I established the 75% group. First, I have established the 75% group. Then I have divided the loss in 2 parts, pre-entry and post-entry. I have divided the loss in 2 parts, pre-entry and post-entry. For pre-entry, we said it cannot be surrendered up till 5 years. For post-entry, we said it can be surrendered. One student is asking, sir, is this answer sufficient for 9 marks? Yes. There is nothing more which you should write here. You have explained all the rules here. Okay? You have explained all the rules here. I have written the rule of corresponding period here if you read it. Okay? The loss can only be surrendered. The loss can only be surrendered if they have sufficient profit in corresponding months. Okay? If they have sufficient profits in the corresponding months. Okay? Sir, can Coro Limited transfer the gain through capital gains group to Salis Limited, which it can add in total income? Yes, that is also possible. Coro Limited can transfer its gains also. But what you need to understand is that in the question, there is no detail given that if Coro Limited has any capital gain or not. Okay? In current year, you can transfer the loss directly. In current year, you can transfer the loss directly, but in carry forward, it is necessary that you first hit your own total income and then you transfer the loss. In current year, you can transfer the loss directly, but in carry forward, you have to offset your own total income first. Yes, the corresponding months after acquisition. Okay? If the company would have left the group, then the loss would have stopped on that date. Okay. What about the incurred trading loss in the year ended 30th June 2021 for Salis? Should we mention? Yes, that is also a pre-entry loss. If that is coming in carry forward, that will also contain, that can also be surrendered to the group after 5 years. Okay, but it was specifically written that we have to comment on the loss of 2022 only. Sir, in 75% group, there is a restriction in loss trade to each other. The restriction is that if the loss is pre-entry, it cannot be surrendered up till 5 years. Number one. Number two, the restriction is that you can only surrender to the corresponding periods. Then another restriction is that if the loss is other than trading loss and non-trading loan relation, you have to offset against your total income first. Okay, we have written all the rules that in carry forward you have to offset against your own income first. Sir, if in paper 75% group is made, but also capital gains group, then which one we should make? Please make it clear. I told in the previous class also, you can form 75% and capital gains group both. You can form one group of each type. There is a very big misconception that we can either form 75% or capital gain. We can form both of them. There is no such restriction that we can only form one group. Okay? Sir, would you please repeat changes of trade rules? If there is change in trade, if the Salis Limited would have changed the trade along with change in ownership, the losses would not carry forward. The losses would get wasted on the date the ownership was changed. But in this question, it was clearly written that there are no plans to change the nature of the trade. Okay? Sir, if there is no income in the second year as well, the loss will go more carry forward, then it will go more carry forward. Okay? So first own total income, then capital gain. After this is set off, then the total income includes the capital gain. Okay, in companies. For individuals, that is a separate thing. Okay, individual losses is completely different. If you will mix it, then you will get stuck. Okay, in individuals, there is no such requirement that first total income, then gain, and then pass on. It is not necessary to hit the gain. I think you are mixing the rules. You should revise them first. Okay. So, the last point given in the summary notes is about the surrender of the pre-entry loss. Okay. It is about surrender of the pre-entry loss that you can only surrender it after 5 years. Yes, in group losses, partial claim is always allowed. In group losses, the partial claim is always allowed, always. Okay, so if we look at this entire answer, because it's done now, the whole question is done. If I look at this entire answer, first of all, he asked us to calculate the chargeable gain arising on the assignment of the lease. It was a simple working of adjusted cost. Okay, it was a simple working of adjusted cost. Okay, that since the lease is being assigned, so you have to look at the adjusted cost. Then there was an issue about the gain which was deferred on the purchase of the lease. So we said that the gain which was deferred on the purchase of lease will get chargeable after the period of 10 years because that was a holdover relief. We studied all this in the previous class. Today we started with the deferral of the gain of the lease through capital gains group. So first we formed the capital gains group, we explained the operation of rollover relief, and then we explained the deferral operation. And then this was the last requirement which we discussed. C, explain the group relief which will be available to the Fox Limited group in respect of the Salis Limited trading loss for the year ended 30th June 2022. So first of all, we said that since we are talking about trading laws, since we are talking about the trading laws, so we will form the 75% group. Since we are talking about trading laws, so we will form the 75% group. Then we divided the loss in pre-entry and post-entry. We divided the loss in pre-entry and post-entry. The pre-entry loss cannot be surrendered to the group up till 5 years. One student has asked that I cannot understand this 5-year rule. Listen to me. The pre-entry loss cannot be surrendered to the group up till 5 years. The pre-entry loss cannot be surrendered to the group up till 5 years. The company should remain in the group for at least 5 years. After 5 years, you can surrender it to the group if you cannot use that loss on your own. After 5 years, if you cannot use the loss on your own in these 5 years, then you can give it to the group company. So the pre-entry loss has to be used by Salis Limited own. But if it cannot be used in 5 years, then you can give it to the group. When we are talking about the post-acquisition loss, you can simply transfer it to the group. But they should have profit in the corresponding periods. Okay. Let's look at the queries of the student. There are some queries. Let me look at it. Just a second. Okay. Which was the last query which we discussed? Okay. One student asked, sir, that I cannot understand this 5-year rule. It is very simple. You cannot surrender the pre-entry losses. You cannot surrender the pre-entry losses to the group companies up till 5 years. Okay. But in 5 years, if you cannot use the loss on your own, then you can give it to the group. Okay. Sir, where to find the recording of the last class? You can find it on the ACCA's YouTube channel. That one student has asked, if there was a capital loss from capital gains group, how it will affect the loss relief? For example, there was a capital loss from Coro Limited can surrender. In capital loss, it is simple that we receive the gains or we can also transfer the losses. So capital loss is something different. The capital loss adjusted against the capital gains. The capital loss is adjusted against the capital gains. It is not adjusted against the total income. Okay. Sir, if the trade of the company got changed, like if in the question it was written that Salis Limited is changing its trade, then what would happen? If the trade would have been changed, the pre-entry losses would not carry forward. The pre-entry losses would have got wasted. If the trade would have been changed, then the pre-entry losses would have got wasted. Now, one student is saying that, sir, sometimes I become lazy and can't study. What should I do? What should you be doing? Then you should pray and start study again. There is no solution for that. And get some motivation. It's just 1 week. Motivate yourself that it's 1 week and then there is a lot of enjoyment in life. Sir, will you please explain the 5 million carry forward rule? This rule was not applying in this question because the loss amount was very less. Okay. This restriction apply if trade was owned by same ultimate parent. Roman, the point which you are asking is related to the transfer of trade within the group. Okay. You can ask me later on after the class. Those are additional points. I'll explain you. Don't worry about it. Sir, can we get the download PDF answers of all ATX CB exams? I yesterday shared my documents on the group. If you want the ACCA answers, they are available. Like when you will go to the practice platforms first screen, you will click on the marking tab. So the platform will provide you the answers of the questions which you have attempted. Sir, you said that capital gain loss, the capital gain loss is part of total income. That is very much true. But the student was asking in the previous area that, sir, if in the question there would be a capital loss, then how we would be taking relief? If there would be a capital loss only adjusts the capital gain. Capital loss only adjusts the capital gain. Okay. Pre-entry capital gains would be allowed to be surrendered. They are surrendered in a sequence. They are surrendered in a sequence, like you cannot give it to the group companies directly. You can surrender it against your own previous gains. If the gains are new, the asset should be purchased from third party. All the rules of pre-entry capital losses are provided here. Okay, the rules of the pre-entry capital losses, they are provided here, the pre-entry losses. What if ownership is not changed but the trade changes? If the trade changes, then there is a restriction in corporation tax that you cannot offset the losses of two different trades. Okay, we cannot offset the losses of two different trades. Sir, I'm managing a very exhausting job with no leave. Any guidance on what should I do? See, you have to study. There is no alternative to study. You have to give time. Even if you have tough schedule, what you can do is that you can wake up early in the morning and you can give 2-3 hours to the study. Okay. Or what my advice to the students is that whatever study time you people have, whatever study time you people have, you should divide it in 3 portions. Now, this is very important. All students should listen. Like if you can study 12 hours, then you should divide it in 3 portions of 4 hours. If you can study 15 hours, you should divide it in 3 portions of 5 hours. If you can study only 3 hours, then you should divide it in 3 portions of 1 hour. Now, what you should be doing in these 3 portions? First portion for revision of the course. First portion for revision of the course. Open the summary notes, open your register from whoever you studied. First portion, you should be revising your course. Second portion, read the past papers and their examiner answers. Read the past papers and their examiner answers so that you can understand the examiner's approach more and more. And in third portion, you should be attempting your own papers on the platform. Now, whatever time you have, if you can only study 3 hours, divide this 3 hours in 1 hour. 1 hour for revision, 1 hour for reading past papers, 1 hour for attempting past papers. Okay, in this way, you can create a balance of revising the rules and attempting them. One student is saying that, sir, I have done the topicals, but still I'm not confident. See, this was the only objective of my sessions, that I want to give you people a confidence that yes, you can do it. For that, what you should be doing is that you should be attempting more and more papers on the practice platform. When you will attempt more and more papers on the practice platform, then only you will get a confidence that, okay, I can do the complete paper. Okay. The change of trade rules do not apply in individuals, they only apply in the companies. Okay. So now we are done with the question number 3. We are done with the question number 3. I hope that you people have understood it. June 2022, question 3. So if you look at this entire paper, like today is the 3rd day. On the first day, we did question 1, question 2, and question 3. What I particularly believe that till now, not more than 7 to 8 marks have come difficult. All of them were routine marks. Sir, when this paper was so easy, the question is that when this paper was so easy, why not the pass rate was 70%? Why not the pass rate was 80%? Why the students failed? See, the students fail because they do not practice complete papers before going into the exam. They face time management issues. The rules get mixed up. They cannot understand the requirements. The only solution to all this, the only solution to all this is to do complete papers on the platform so that you can understand that how you have to deal with the complete requirements. Okay. One student has said that, sir, I have attempted plenty of the papers. Now, what should be the advice for me? A standard advice. A standard advice. Divide it in three portions. Portion 1, revise rules. Portion 2, read past paper answers. Portion 3, attempt more papers. Okay. One student is saying, sir, I have done all the papers which you have taught. Now what should I be doing? You should be attending some papers on your own also. Okay. For remaining 4-5 days, the approach is divide your time in three portions. Portion 1, revise rules. Like if you can study 10 hours, divide it in three portions. 3 hours. First 3 hours, revise rules. Then 3 hours, read examiner answers. Then 3 hours, attempt one paper on your own. Whatever time you have, divide it in three portions and follow the approach. Let's move forward to the last question of this paper. Okay, I want you all to concentrate on it. You should assume that today's date is 1st June 2022. Lucis has requested advice in relation to the following: the potential inheritance tax payable in respect of a planned gift of investment property, the tax implications of sale of enterprise investment scheme shares, and the income tax implications of using the sale proceeds to repay a debt. So this is a brief introduction that what he will be asking us in the question. Let's read the first exhibit. I want you all to concentrate on it and listen to me carefully. Lewis is resident and domiciled in UK, has a son Mario and a daughter Sylvia, has never been married or had a civil partner, owns a portfolio of residential investment property, has previously been a higher rate taxpayer in all relevant tax years, with the exception of the tax year 2021, when he was an additional rate taxpayer. Prior to the tax year 22-23, his income in every year entirely comprised non-saving incomes. So some brief information about Lewis: has a son and a daughter, is not married, owns some investment properties, and his tax details. Planned gift of Ivy Cottage to Sylvia. Lewis will gift Ivy Cottage, a residential investment property, to Sylvia on 31st July 2022. Lifetime gift to an individual. Please tell me, lifetime gift to an individual. It will be a potentially exempt transfer. Ivy Cottage will worth £245,000 on that date and is expected to appreciate in value over the next few years. Lewis has made one previous gift of £250,000 in cash to Mario on 1st January 2019. So this is some discussion about the planned gift of Ivy Cottage to Sylvia. Then there is detail about some sale of house. So let's read the requirement. If we can solve some of the part of the question. C. You should assume that today's date is June 22. Explain the circumstances. Please listen. Explain the circumstances under which the maximum liability to inheritance tax will arise in respect of the Lewis planned gift of Ivy Cottage to Sylvia, and calculate the amount which would be payable by Sylvia in this situation. How many marks? 5 marks. I want you all to explain the circumstances when maximum IST can arise. Can anyone tell me the situation when maximum IST will arise? One student said that Lewis dies in 7 years. And not only in 7 years, he dies within 3 years. He dies in 7 years. And not only in 7 years, he should die within 3 years. Okay. Now, there is one point which all the students are missing. Yes, same question as came in the past paper also. One same question as came in the past paper also. It's just a repeat telecast. Lewis should die within 7 years of 31st July 22, situation 1. Situation 2, he should not only die within 7 years, he should die within 3 years, so that taper relief also gets wasted. One more thing, he should die within 7 years of January 19, so that this gift also gets chargeable and it uses up the nil rate band. He should not only die within 7 years of this gift, he should die within 7 years of the gift to Mario, so that the nil rate band also gets used up. Let's look at it while I develop the answer. Look at it. Question number 4. Lewis. Now, explain the circumstances under which maximum liability. See, I am underlining this word, maximum liability, will arise in respect of Lewis' planned gift of Ivy Cottage to Sylvia. Now, planned gift of Ivy Cottage to Sylvia by Lewis will be regarded as a potentially exempt transfer, as it is a lifetime gift made by one individual to another. Just listen to me. Planned gift of Ivy Cottage to Sylvia by Lewis will be regarded as potentially exempt transfer, as it is a lifetime gift made by one individual to another. Okay, no lifetime tax on potentially exempt transfer. See, the value of gift will get locked when you make a lifetime gift. Even the value of the property is rising, but the IST will not increase, because when you make a gift, the value gets locked. One student is saying that, sir, value is increasing, that's why debt tax will be high. Debt tax will not be on market value or debt. The value gets locked. Okay, the gain in value will not be chargeable. Now, first of all, we said planned gift of Ivy Cottage to Sylvia by Lewis will be regarded as pact, as it is a lifetime gift. No lifetime tax on pact. This pact will get chargeable to death tax if Lewis will die within 7 years of gift. Within 7 years of gift. That is Lewis dies before what date? The gift is made on July 22. That is, Lewis dies before 31st July 2029. Please listen to me how I develop the answer. This pact will get chargeable to death tax if Lewis dies within 7 years of gift. That is, Lewis dies before 31st July 2029. Gift was made on 31st July 2022. The gift was made on 31st July 2022. So if Lewis dies within 7 years, the death tax will apply. Death tax will increase further if Lewis dies within 3 years. First we said within 7 years, then we said within 3 years of lifetime gift. As in that case, death tax will also apply and taper relief will also fall to 0. This means that IHT will increase if Lewis dies before 31st July. The gift was made in 2022. Before 31st July 2025. Again, for reminder, I am writing in bracket that gift was made on 31st July 2022. See how I developed the answer. Look at the approach. First, I identified that it is a pact. Then I identified that death tax will apply if he dies within 7 years. Then I further explained that if he dies within 3 years, then taper relief will apply. Okay. Let me reply to the query of one student. Just a second. Sir, if value less and value in value relief available, then relief after. I think you are talking about fall in value relief. Zishan, I think you are talking about fall in value relief. The fall in value relief applies when the value of asset falls till the date of death. The fall in value relief applies when the value of asset falls. In this question, the value of asset is increasing. When the value of asset is increasing, we lock the value. Okay? So there is no issue of fall in value relief here. Sir, if I used to explain the rule first and then connect it to the scenario, yes, you can explain the rule first also. Okay? But don't make it too much clerical. The examiner wants that you directly apply it to the scenario. If you will write the rule first and then apply rule, that will waste a lot of time. Okay, so try and connect to the situation directly. Okay, so first of all, we identified that it is a pact. Then we identified that Lewis should die within 7 years. Then we identified that if Lewis dies within 3 years, then IHT will increase further. In case of Lewis, IHT will rise more. It will increase more. When it will increase more? If this gift of 2019 also gets chargeable. In case of Lewis, IHT will rise more if Lewis dies within 7 years of gift he made, to his son Mario on 1st January 2019. C. The gift which he made on 1st January 2019. In case of Lewis, IHT will rise more if Lewis dies within 7 years of gift he made to his son Mario on 1st January 2019. In this case, gift to son will use up the nil rate band, while calculating IHT on gift to Sylvia. I will repeat the things again. Just listen to me carefully. Okay. In case of Lewis, IHT will rise more if Lewis dies within 7 years of gift made to his son Mario on 1st January 2019. In this case, gift to son will use up the nil rate band while calculating IHT on gift to Sylvia. Okay. For this situation to apply, Lewis should die before, add 7 years to January 19, January 20, 20, 21, 22, 23, 24, 25, 26, should die before 1st January 2026. See how I am developing the answer. I am going step by step. I am not rushing. First, I identified that it is a fact. Then I said that dead tax will arise if he dies within 7 years. Then I said that if he dies within 3 years, then taper relief will also be removed. And then I said that if the previous transfer also gets chargeable, then IHT will be maximum. Then IHT will be maximum. Okay? The IHT will be maximum. If all three scenarios are considered, then IHT will be maximum if Lewis dies before 31st July 2025. If Lewis dies before 31st July 2025. See, this date is 2029. Let me underline it. This date is 31st July 2025. And this date is 1st January 2026. Take the earliest date. Dies before 31st July 2025. In that case, gift of cottage, gift of Ivy cottage will get chargeable to death tax. Taper relief will also fall to 0. And gift to Mario will also use nil rate band. Are you getting it? Let me repeat it. I am going step by step so that the things get clarified in your mind. He said, explain the circumstances under which maximum IHT will arise. Explain the circumstances under which maximum IHT will arise. Please listen. In respect of the Lewis gift of Ivy cottage to Sylvia. So first of all, we said that it is a pact. First of all, we said that it is a pact. On pact, there is no lifetime tax. He asked us the circumstance when the IHT will be maximum. So first of all, we said that it is a pact. On pact, there is no lifetime tax. Then we said he should die within 7 years so that death tax gets applicable. Then we said he should die within 3 years so that taper relief gets withdrawn. And then we said that the previous gift should also get charged. So the first point suggests 31st July 29. Second point suggests July 25. And third point suggests January 26. So he should die on the worst date. The worst date. Then the death tax also gets chargeable. Taper relief also gets withdrawn. And the old gift also gets chargeable. Okay? If Lewis plans to give next year, then value of cottage would have been increased. See, he is not asking us the situation that he should shift the gift date. He is not asking about that thing. He is saying that what is the situation when maximum liability will arise? The gift is already being planned. The gift is already being planned on this date. He is not asking us to change the gift date. He is not asking us to change the gift date. Okay? One student is saying, sir, why are you not talking about the taper relief of gift to Mario? Listen to me carefully, Hassan, you will get the point very clear. Listen to me carefully. See, we are not required to calculate IHT on gift to Mario. Read the requirement. We have to calculate IHT on gift to Sylvia. We are not required to calculate IHT on gift to Mario. Listen to me. The taper relief on gift to Mario will not affect the IHT on Sylvia gift. Okay, we just want that this Mario gift gets chargeable so that it uses the nil rate band. We have nothing to do with the taper relief of this one. We have nothing to do with the taper relief of Mario. Okay, we just want that this gift gets chargeable. Okay, see, what you need to understand is he's asking the maximum liability in respect of the cottage. He's talking about maximum liability in relation to the cottage. So first, the cottage is pet. Second, Lewis should die within 7 years. Then he should die within 3 years so that taper relief also gets withdrawn. And then we just want that gift of Mario becomes chargeable. We just want that gift of Mario becomes chargeable so that it uses the nil rate band. And when it will use the nil rate band, what will happen is, when it will use the nil rate band, what will happen is that the IST on cottage will increase. Okay, we'll go to the break. Just we are doing the calculation. It's almost done. Just doing the calculation. It is very easy. Value of transfer. What is the value of transfer of the cottage? It's 245,000. The value of transfer is 245,000. Value of transfer is 245,000. Okay. Then annual exemption. Annual exemption. Current year and last year. Annual exemption current year and last year. Gift was made on what date? Can anyone tell me? Gift was made on what date? Gift will be made on 31st July 2022. Gift will be made on 31st July 2022. Okay, gift will be made on 31st July 2022. Let me make it 6,000, current year and last year. Annual exemption of 2022-23 and 2021-22, both are available. I will repeat the things. Just listen to me carefully so that you people can understand in a better manner. Okay, value of transfer is 245,000. Value of cottage at time of gift on 31st July 2022. Yes, making these comments is necessary. These are called footnotes. Value of transfer is 245,000. Annual exemption of current year and last year, both is available because the previous gift was made in 2019. The previous gift was made in 2019. Okay. So what is the value of pet? 239,000. Okay. Now, no lifetime tax on pet. No lifetime tax on pet. Then there will be a death tax. Then there will be a death tax. Listen to me carefully. Then there will be a death tax. Now, pet value is 239,000. Please listen to me. The pet value is 239,000. Nil rate band. What is the value of nil rate band? Can anyone tell me? What is the value of nil rate band? Please listen to me. Death year NRB. It's 325,000. Death year NRB is 325,000. Gift of Mario. What was the value of gift to Mario? Lewis has made one previous gift of 250,000 in cash to Mario on 1st January 19. Please listen to me. Don't rush. 250,000. See, you all are giving wrong answers on the chat box because you all are in hurry. Now, gift to Mario. Value of transfer. What was the value of transfer to gift to Mario? It was 250,000. It was 250,000. Annual exemption. Current year and last year. Why current year and last year? Just give it a thought. Because the gift was made in January 19. January 19 means 1819. January 19 means 1819 and 1718. Older dates, the annual exemption was available. The value of PAT was 244,000. See, this is very easy working, but you will do mistakes if you will do silly errors. So the available NRB. What is the available NRB? 325 minus 244. It's 81,000. Just a second, let me add a row here. Okay, the available NRB is 81,000. Okay, so what is the chargeable value? What is the chargeable value? 158,000. So what will be the death tax? 158,000 into 40% death tax. 63,200. I know that some of the students may have got confused and they must be thinking that, oh, advanced tax is so difficult. See, these all workings which you are doing are not difficult. They just require alertness of mind. The residence NRB is not available because it is not a gift through death estate. The residence NRB applies when you give through death estate. It was not a gift through death estate. Okay? Let me repeat the things again. He said that what will be the maximum IST? He said that what will be the maximum IST that can arise? So first of all, we said that it is a PAT. First of all, we highlighted that it is a PAT. Okay. Then we said that Lewis should die within 7 years so that this PAT gets chargeable. Okay. The Lewis should die within 7 years. Okay. Then we said he should die within 3 years. He should die within 3 years so that taper relief gets applicable. Then we said that old transfer should get chargeable. The old transfer should get chargeable. We identified the situations and then we calculated the tax. Okay. We said, okay, the value of transfer is 245. The 2 years nil rate band. This is the PAT. Then we are calculating the debt tax. Now the nil rate band. Now the nil rate band. Now while we are calculating, commenting on the nil rate band, what did we do? We said, okay, the nil rate band is 325. The gift of Mario has become chargeable. This is the available nil rate band, chargeable value and debt tax. Two things. Residence NRB is not available on investment properties. For residence NRB, it is necessary that it should be your primary residence. And secondly, residence NRB applies when you give through death estate. When you give through death estate, this was a lifetime gift. Okay. Sir, if there is a death state, then it will be on the increased value. Yes. When you calculate IST through death estate, basically when you say the word death estate, this means that you didn't made a lifetime gift. In case of death state, you make a gift on death. You don't make a lifetime gift. Here he is planning to make a lifetime gift. Okay. Sir, do we also write who pays and due date? If he asked, then we write. He has not asked in the question that who will pay the IHT and what will be the amount. He just said the maximum liability and the circumstances in which that maximum liability will apply. Yes, the residence NRV would not apply because it was an investment property. Who will pay IHT? The debt tax is payable by donee. Okay. The debt tax will be paid by donee. So if you look at this answer, sir, I think you are more than 5 marks, far more. Now, when we were writing small answers, you were saying that the answer was small. Now, if the examiner takes an extra effort from you, then why you should be crying? Basically, this, see, what you need to understand is that when the examiner will ask a technical requirement, it will always be brief. But when he will ask a clerical requirement, it will be lengthy. This was just a clerical requirement. It is part of the course of skills module. It is the part of the course for skills module. It is not a professional module. This was so basic. That's why he made you do greater working. Yes, the IHT administration can come in the exam. Sir, we should be given pardon for at least comment on Excel working. Like in the Excel also, you can increase the size of the column and comment. But I personally feel that using word processor is more easy. In the case of gift to trust, who will pay the tax? That depends. Donor can also pay and donee can also pay. Okay. And due to that, the rate also changes. So let's take a break before we move towards the second requirement. This was an easy requirement. That's why we did before going to the break. Once we will return from the break, we'll do this part B. Okay. So let me just copy the requirement here and then we'll do once we return. So this is a complete 9 marks requirement. So break 15 minutes. Sir, in case of, I think I have responded to it, that in case of trust, it varies. Some student has said some 36%. I cannot understand that what you are trying to ask. Okay. You can send me a detailed query. We'll look at it after we resume from the break. Okay, so let's resume. Everyone, please confirm me if you all are back so that we can start the discussion. Okay, so we are starting with part B. I want you all to concentrate on it. Explain the immediate income tax and capital gains tax implication of the Lewis sale of Floors Limited shares. So let's read the situation about these Floors Limited shares. I want you all to concentrate. We have read till planned gift of Ivy Cottage. Now we are moving forward. Sale of U House. On 1st May 2020, Lewis sold U House, a residential investment property, for the proceeds of £366,000. The sale gave rise to chargeable gain of £71,000. So he sold some U House for 366,000, on which the gain was £71,000. Then he acquired the shares in Floors Limited. On 1st June 2020, Lewis subscribed £120,000 for 50,000 newly issued shares in Floors Limited, a UK resident trading company. These shares were qualifying investment shares, enterprise investment scheme shares, EIS shares. Lewis obtained EIS relief of £36,000, which is the 30% of investment, against his income tax liability for the tax year of 2021. Lewis elected to defer the maximum amount of gain on the sale of U House as a result of acquisition of these shares. So when he acquired the EIS shares, he took two reliefs. Please listen to me. When he acquired the EIS shares, he took two reliefs. One was the income tax relief. One was the income tax relief, and other was reinvestment relief. I hope you all remember. If you will just search EIS, Enterprise Investment Scheme shares. So in the summary notes, you can find that there is income tax relief and there is CGT reinvestment relief. Through income tax relief, your income tax liability gets reduced. Through CGT reinvestment relief, the gain of the previous asset gets deferred. Sale of shares in Floors Limited. On 1st April 2022, Lewis sold all of his shares in Floors Limited to an unconnected person for £85,000, their market value on that date. Lewis will claim the most tax advantaged relief for any loss which arises in respect of this sale. Now he purchased these shares in June 20. Please listen to me, everyone. He acquired these shares in June 20 and he is selling them in April 22. He is selling them within 3 years. I hope you all remember that if you sell EIS shares within 3 years, the income tax relief gets withdrawn. Everyone, are you listening me? If you sell EIS shares within 3 years, the income tax relief gets withdrawn. The EIS relief will get withdrawn. So what he is asking, explain the immediate income tax and capital gains tax implication of Lewis sale of his Floors Limited shares. Lewis claimed EIS, enterprise investment schemes. Lewis claimed income tax relief of EIS scheme of enterprise investment scheme on purchase of Floors Limited shares. Lewis claimed income tax relief of EIS on purchase of Floors Limited shares. As he is selling the shares within 3 years, therefore, income tax relief will get withdrawn. Let me repeat it again. Lewis had claimed income tax relief of EIS when he purchased these Floors Limited shares. Now, since he is selling these shares within 3 years, that's why the income tax relief will get withdrawn. Lewis purchased these shares on what date? Can anyone tell me? He purchased these shares in June 20 and he's selling them on April 20. Lewis purchased these shares on 1st June 2020 and he is selling them and he sold them on 1st April 2022. June 20 and April 22, which means he sold within 3 years. Income tax relief will get withdrawn at lower of two things. Do you people remember? The income tax relief gets withdrawn at lower of two things. Number one, original relief. What was the original relief he got? The original relief was 36,000. This was the original relief which he claimed. Okay, the original relief was 36,000 pounds, which was 30% of his investment. And second is disposal proceed multiplied by effective rate of relief. What is the disposal proceed? Can anyone tell me? He is selling these shares for 85,000. He is selling these shares for 85,000 multiplied by rate of relief. So 30% of 85,000 is 25,500 pounds. Okay. So income tax relief withdrawn of 25,500 pounds will be added in income tax liability of Lewis in year of disposal. In year of disposal. What is year of disposal? Year of disposal is 2021/22 because disposal date is 1st April 2022. 1st April 2022 is 21/22. Please confirm me if you people are understanding it. He has asked us the immediate income tax. He has asked us the immediate income tax and capital gain tax implication of Lewis sale of his Floors Limited shares. So first of all, he claimed income tax relief which will get withdrawn. Okay, he claimed income tax relief which will get withdrawn. The effective rate of relief can be different. One student is asking that, sir, this effective rate will always be 30%. No, it can be different. It can be different when you claimed relief at lower of two things. Listen to me. When you claim relief of EIS, the relief is at lower of two things. 30% of investment and tax liability. If your tax liability at time of relief is lower, then your effective rate can differ from 30%. Okay, so the effective rate of relief is not always 30%, but in this question it was 30% as it was stated here. Okay, the effective rate of relief can be different because when you claim EIS relief, original relief, it is at lower of two things, 30% and tax liability. So if the tax liability is lower, then it can get deferred. Okay, so we have commented on the income tax implication. Now let's talk about CGT implication. Let's talk about CGT implication. Now, from CGT perspective, sale of closed limited shares is a chargeable transaction. Okay, so let's calculate the CGT on it. Disposal proceed is how much? The disposal proceed is 85,000 pounds. Please listen to me carefully. He sold the shares for 85,000. He sold the shares for 85,000. What is the cost? The cost is 120,000. The cost is 120,000. The cost is 120,000. So he has suffered a capital loss. 120 minus 85. He has suffered a capital loss of 35,000. But he was already given some EIS relief. The EIS relief already given is adjusted in your capital loss. Let me repeat it again. Listen to me very carefully. See, what you need to understand is he disposed the shares. I will come towards the deferral thing also. I am going step by step. Don't mix up the things in the exam. Go step by step. First, we commented on withdrawal of income tax relief. Now we are calculating the gain loss on the disposal. The disposal proceed is 85,000. The cost is 120,000. The capital loss is 35,000. He was already given some EIS relief. He was already given some EIS relief. EIS relief awarded was 36,000 pounds. EIS relief withdrawn. How much relief was withdrawn? 25,500. So the net EIS relief which he has already got is 36,000 minus 25,500. This amount will be removed from his loss because this amount was given to you by the tax department. So the capital loss which is remaining, is 24,500 pounds. Let me repeat it again so that if anyone has any query, it gets cleared. See what he has asked. Explain the immediate income tax. Explain the immediate income tax and capital gains tax implication of Lewis sale of his closed limited shares. So since he's selling the EIS shares within 3 years, income tax implications of sale of closed limited shares. Okay, so since he's selling the EIS shares within 3 years, that's why the relief has gotten withdrawn. Then we are talking about immediate capital gains tax implications. Okay, so in capital gains tax, a capital loss is created. Now there is one more point. Further capital gain deferred. Listen to me. Further capital gain deferred of U house against purchase of EIS shares will also get chargeable. The gain of U house which was deferred, Lewis elected to defer the maximum amount of the gain on the sale of U house. This deferred gain will also get chargeable. Now, what was the amount of gain deferred? Can anyone tell me? What was the amount of gain deferred? amount of gain deferred was lower of two things. The reinvestment relief is lower of two things. Gain. What was the value of the gain? The value of the gain was 71,000 pounds. The value of the gain was 71,000 pounds. And amount of reinvestment. What was the amount of reinvestment? The amount of reinvestment was 120,000. The amount of reinvestment was 120,000. Okay. So this deferred gain of 71,000 pounds will also get chargeable in year of disposal of Floors Limited shares. Okay. This deferred gain of 71,000 pounds will also get chargeable in year of disposal of Floors Limited shares, which is 2021-22. Okay. Let me repeat it again. Against purchase of Floors Limited shares which were eligible. Okay, let me repeat the things again. The 50% applies in case of SEIS, not in EIS. See, what you people need to understand is that when you are applying the answering the examination question, you should go step by step. Don't rush in the exam. Let me repeat the things again. He asked us, explain the immediate income tax. First of all, explain the immediate income tax. And capital gains tax implications of Lewis sale of his Floors Limited shares. So first of all, we commented on immediate income tax implications. See, normally when we sell the shares, there is no income tax. Normally when I sell the shares, there is no income tax. There is no relation between income tax and sale of shares. But in this question, it was clearly written that we claimed EIS relief. Now, when you claim EIS relief, it is necessary to retain the shares for 3 years. When you claimed EIS relief, it is necessary to retain the shares for 3 years. Okay? When you claimed EIS relief, it is necessary to retain the shares for 3 years. But since he's selling it within the 3 years, so EIS relief will get withdrawn. Original relief and proceed into effective rate of relief. This relief withdrawn will be added in his income tax liability. Then comes immediate capital gains tax implication. Then comes immediate capital gains tax implications. So now we are talking about immediate capital gain tax implication. Disposal proceed less cost gives us the capital loss. Disposal proceed less cost gives us the capital loss. But if you have already got some EIS relief, it is adjusted. I hope you all remember that if you have already got some EIS relief, that simply gets adjusted in it. Because the tax department says that we will not give you double relief. We have already given you some relief, so that will be adjusted in your loss. Further, capital gain deferred of U House against purchase of Floor Limited shares. Okay, against purchase of Floors Limited shares, which were EIS shares, will also get chargeable. That deferred gain will also get chargeable. Okay, gain and amount reinvested. It is very true that tax is all about presence of mind. It is all about remembering the rules. It is all about sharpness of the mind. So how you will improve your presence of mind? You have to revise the rules again and again. You have to revise the rules again and again, number one. And number two, you have to do more and more past papers. When you will do more and more past papers, then only your presence of mind will increase. Okay. So these were the three implications. Then state the relief available for capital loss arising on this sale. including the rates of tax saved in respect of each relief, and advised Lewis of the most tax advantage relief available to him. I want you people to answer me. I want you people to answer me. What are the reliefs available in relation to this loss? I want you people to answer me. Please tell me in the comment box. What are the reliefs available in relation to this sale? Tell me. It is a capital loss. It is a capital loss. Now one student said, sir, carry forward. Why will you carry forward? This is a capital loss adjusted against this gain. This is a capital loss of 24,500 adjusted against this gain of 71,000. But you people should remember that EIS losses, if you people remember, the losses of EIS shares can also be relieved in income tax. The losses of EIS shares can also be relieved in income tax. I hope you people remember. The loss relief of EIS shares can also be claimed in income tax. Okay, so now again, if you people don't remember the rule, then there will be issue. Okay, one student is saying that, sir, I have studied whole ATX and I feel that I'm forgetting old rules. This is issue with all the students. You are not the only one. That is the reason why I told you people that divide your day in 3 portions. One portion, revise the rules. Second portion, read the examiner answers. Third portion, write your own answers. Okay. Now he's asking relief on capital loss of EIS shares. What is the relief on capital loss of EIS shares? Lewis has suffered capital loss of 24,500 on sale of EIS shares. On sale of EIS shares. He can relieve it against his current year chargeable gain. He can relieve it against his current year chargeable gain of U house of 71,000 pounds. You can simply adjust it against your current year chargeable gain. Gain of U house will be subject to CGT rate of 28%, as U house is a residential property and Lewis is a higher rate taxpayer. Okay, in this case, Lewis can save 24,500 into 28%, which means 6860 pounds. Let me repeat it again. See, I know that some of the students will make errors in this part of the answer because this requires remembering some very detailed rules. This requires remembering some very detailed rules, but the only solution for it is to do more and more practice and revise the rules. Lewis has suffered capital loss of 24,500 on sale of EIS shares. He can relieve it against his current year chargeable gain of U house of 71,000. You yourself wrote that it will become chargeable. Gain of U house will be subject to CGT rate of 28%, as U house is a residential property and Lewis is a higher rate taxpayer. It is written here, has been a higher rate taxpayer. Another option is that Lewis can treat this capital loss, or I would say can relieve this capital loss in income tax return. Another option is that Lewis can relieve this capital loss in income tax return of current year or last year, as it is as floors limited shares were eligible for EIS relief. Another option is that Lewis can relieve this capital loss in income tax return. See, if there is a capital loss on EIS shares, you have two options. Either treat it as a capital loss or treat it as income tax loss. Sir, why didn't you comment on annual exemption? You are claiming the relief against gain of 71,000 and your loss amount is 24,500. So even if you will adjust the entire 24,500, your annual exemption will still be utilized. Your annual exemption will not get wasted. If you will claim the loss relief of 24,500, your gain is of 71,000. It is sufficient enough to utilize your annual exemption also. Now, another option is that Lewis can relieve the capital loss in income tax return of current year or last year as floors limited shares were eligible for EIS relief. Yes, this concept is available in SEIS also. Tax efficient investments are only for individuals, not for the companies. Okay. Now, year of disposal. What is the year of disposal? Year of disposal is 21-22. Year of disposal is 2021-22. Lewis is if you look at the question, Lewis has been a higher rate taxpayer in all relevant tax years, with the exception of 2021 when he was additional rate taxpayer. Lewis is a higher rate taxpayer in 2021-22, but an additional rate taxpayer in previous year of 2020/21. See, the year of disposal is 21-22. He is a higher rate taxpayer in all the years, but in 2021 he is additional rate taxpayer. Lewis is a higher rate taxpayer in 2021, but an additional rate taxpayer in 2021. Maximum loss relief will be if Lewis relieves his capital loss of 24,500 in income tax return of previous year, that is in 2020-21, and get tax benefit of 24,500 into 45%. 24,500 into 45%, which means 11025. Let me repeat it again. Many of the students among you people may feel that you don't remember these rules, because this is one of the very initial topic which you study in ATX. This is one of the initial topics which you study in ATX. So you forget this topic while you go forward. And obviously in this exam, he gave you this topic for 9 marks. He gave you this topic for 9 marks. So if someone would have skipped this topic, he would have simply lost these marks. Let me repeat it again. First of all, he asked us about the immediate income tax implications of sale of floors limited shares. Normally, when you sell shares, the shares, there is no income tax. Normally, when you sell the shares, there is no income tax. But since these shares were of EIS, that's why the relief got withdrawn, because you sold within 3 years. Number one. Number two, when you sold the shares, there was capital loss. Number three, the deferred gain got chargeable. Once all is done. Now, relief on capital loss of EIS shares. There is a capital loss of 24,500. Now, whenever you have a capital loss, you can either claim in current year or you can carry forward it. Please make it very clear. The capital loss is current year or carried forward. Capital loss only carries back in year of death. And Lewis is not dying in this question. Okay. So in current year, he has a gain of 71,000 of U house. And since that was a house, so he can get a saving at 28%. Okay. Now, the EIS shares. In EIS shares, if there is a capital loss, you can also treat it in income tax return. Now, when you go in income tax return, the EIS relief can be claimed in current year and it can also be carried back by 1 year. So in the current year, he was a higher rate taxpayer, but in previous year, he was additional rate taxpayer. So obviously, we are claiming the loss relief, and in loss relief, the highest rate is more favorable. Greater the rate is and greater the relief will be. Some students are getting confused that, sir, whether this EIS and SEIS reliefs, are available in companies also. So please make one thing clear. EIS and SEIS is the concept of individuals. It is not the concept of companies. Tax efficient investments are made by individuals. Sir, I always get confused with tax efficient investment and share option plans. What is the advice? My advice is go and listen the lecture of these two topics again. Your mind will automatically get clear. Tax efficient investment is something different. It has reliefs relating to tax liability. Employment plans are of employment income. These are two different topics. Okay, go and attend the lecture again. You people are living in a pro time when you have recordings of everything. Okay. Please confirm me if it is clear, and if anyone has any query, please tell me. If anyone want to ask anything. If any query, please tell me. So first of all, there was immediate income tax implication on sale of EIS share. So the income tax relief was withdrawn. Then there was capital loss. Then the deferred gain got chargeable and the relief on capital loss. Let's move to the last requirement of this paper. Sir, there is a question, please. How can we access to the lectures and the materials you are referring to? How do we access to the class notes for the 3 days? You can click on the handouts tab of your webinar. In the handouts tab, the summary notes are also available. The WhatsApp group link is also available. And the solutions which we have discussed in the previous 2 classes is also available. Okay. Now, let's come to part C. Now, this is a very interesting part. This is a very interesting part of 6 marks. This question was a trick question, I would say. This part C was a trick question. But not difficult. If you will look at it, you will enjoy this question. Because the examiner gave a very interesting question. So let's read it and then read the scenario also. I want you all to look at it carefully. Explain the income tax treatment for Lewis of the receipt of the bank interest and payments of the mortgage loan, and calculate the after-tax net saving for a full tax year if he decides to repay the mortgage loan. Now let's read the situation which is given here. Lewis interest receivable and payable. See, it is a very good part, and I would like that you people answer it and we'll discuss. Okay, first you will tell me on the chat box and then I'll draft a very basic question. Believe me, a very basic question, but he drafted it in a beautiful manner. On 6th April 2022, Lewis deposited the whole of the proceeds from the sale of the Floors Limited shares in a bank deposit, which will pay annual interest of £850. Everyone, please listen to me. Lewis has made a deposit of how much? £850. Okay. Lewis has made a deposit of the sale of shares and he's getting interest of £850. Lewis is considering withdrawing all the deposited funds and using the money to repay the mortgage loan outstanding on one of his residential investment property. Interest of £1275 per annum is annually charged on the mortgage loan. Lewis will be a higher rate taxpayer in all relevant tax years. So there are two situations in this question. Lewis has made a deposit on which he is getting interest of £850, one situation. There is one more thing. He is paying some interest on mortgage loan of £1275. Now read the question. Explain the income tax treatment for Lewis of the receipt of bank interest. First, let's solve this part. I want you people to answer me. First, tell me this. Income tax treatment for Lewis for the receipt of the bank interest. What is the income tax treatment? Please tell me. What is the income tax treatment for the receipt of bank interest? One student is saying bank interest will be treated as dividend income. Why it will be treated as dividend income? Why are you saying this? Please don't give wrong answer, otherwise my blood pressure gets increased. On 6 April, Lewis deposited the whole of the proceed from the sale of the Floors Limited share in a bank account, which will pay him an interest of £850. Very simple. This £850 is his interest income. On first £500, we will apply 0%. On rest, we will apply 40% because he is a higher rate taxpayer. Okay. Interest income received by Lewis of how much? Interest income received by Lewis of how much? £850. Interest income received by Lewis of £850 will be classified as saving income for Lewis. Okay, he will have to pay 0% tax on first £500 and 40% tax on remaining amount. His income tax will be, what will be the income tax? £850 minus £500. You will pay 40% on remaining. 140. See, if someone would make an error in this part also, then he should seriously think about himself. Such a basic thing he has asked. Interest income received by Lewis will be classified as saving income. He is a higher rate taxpayer. So 0% on first 500 and then 40% on remaining. Read forward. Explain the income tax treatment of Lewis of the receipt of bank interest and payment of mortgage loan interest. Here you can make an error. So be very careful. Be very careful here, okay? Income tax treatment for Lewis of the payment of mortgage loan interest. Here you can make an error. What about the income tax treatment for Lewis of the payment of mortgage loan interest? It is a residential investment property. Now, if you remember property income, the interest expense on residential properties is relieved at 20% only. Okay? See what he is asking here. Read the requirement. Income tax treatment for Lewis of the payment of mortgage loan interest. Repayment is in second part. I am doing part 1 currently. Okay. Interest expense paid by Lewis of how much? Interest expense paid by Lewis of how much? 1275 pounds. Of 1275 pounds on mortgage of residential investment property will get tax relief at fixed rate of 20%. Okay. Finance cost, always remember, interest cost on residential investment property is relieved at restricted rate of 20% as per rules of property income. You should remember this. This was a very basic relief. His tax relief will be 1275 pounds into 20%. 1275 pounds into 20%, so it is 255 pounds. Believe me, a very basic requirement, but obviously it requires good memory, alertness of the mind. Income tax treatment on receipt of bank interest. 500 pound is exempt, rest subject to higher rate of tax. Income tax treatment on interest expense. Interest expense paid by Lewis of 1275 pounds on mortgage loan interest, on mortgage loan of residential investment property will get tax relief at fixed rate of 20%. Interest cost on residential investment property is relieved at restricted rate of 20% as rules of property. See residential investment property. So it will go in rules of property income. Then calculate the after tax net interest saving for a full tax year if he decides to repay the mortgage loan. Okay, what is his after tax net interest saving? What is his after tax net interest saving? What is his after tax net interest saving? Can anyone tell me? If he repays the loan, interest income lost, he will lose the interest income of 850 pounds. He will lose the interest income of 850 pounds. If loan is repaid through the deposit amount, then there will be no more interest income. See, if we will use the deposit to repay the loan, then there will be no interest income. Income tax saving on interest income. See, please try and understand. He will lose the interest income, but then there will be no income tax on the interest income. When there will be no interest income, there will be no income tax on it. Please try and understand. You will lose the interest income. But then the tax will also be saved. Interest expense paid every year. This will be your saving. If loan is repaid, then interest expense paid every year will be saved. Okay, but you will lose the tax benefit. If there will be no interest expense, then tax benefit will also be lost. So what is the net impact? Can anyone tell me? You will lose interest income of 850, but your tax will then your tax will be removed. Your interest expense will be saved, but your allowed expense will be lost. So the net impact is 310 pounds. Okay, net 310 pounds will be saved every year. Now, this was really a question which requires alertness of the student, I would say, because some students may make an error in it. Because some students may make an error in it because they may think it very simple. That he will start and think that why the student examiner is just asking about the tax on the interest income, then the allowed expense thing, and then the net impact. I would agree that it was a tricky question. I told you at the very start that this was a trick question. If you will repay the loan through deposit, you will lose the interest income. If you will repay the loan through your deposit, you will lose the interest income. See, what you are trying to do is you will take out your deposit. Lewis is considering withdrawing all the deposited funds. So if you will withdraw the deposit, you will lose the interest income, but then there will be no tax on it. If you will repay the mortgage loan and using the money to repay the loan. So if you will repay the loan, then there will be no interest expense, which will be your saving. But then there will be no tax benefit. Okay. One student is asking when 250 with explanation was wrong. I didn't get what you are asking, what 250 you are asking. Sir, what if he was a basic rate taxpayer? Yes, then also the interest relief will be at 20%. Then also it will be 20%. Sorry, 255 tax benefit. If you wouldn't have given explanation, then you would have lost 1 mark. Because what you need to understand is that he specifically told you to explain. And in this question, if you look at the mark breakup, like he would have given 1 mark for this, 1 mark for this, and then 3 marks for this working. Because otherwise there was nothing difficult in it. Now, if you look at this question, I would say that as compared to the entire paper, this question was a bit tricky. I'm not saying that this question is very much tricky, but when I compare it with the rest of the paper, because rest of the question 1, 2 were very much straightforward. First was maximum IHT. This was one of the requirement which is already coming past papers also. Okay. Then there was discussion on EIS shares. I would say that this was not difficult, but it requires remembering the rules. And then last part was a trick part. The last part was a trick part when he asked you about the tax on the income, the relief on interest expense. And then he asked you the net saving impact. I hope that I have made myself clear. See, today is the second last day of our webinars. Tomorrow will be the last day, and you have now less than 1 week to the exam. Please do more and more past papers. Now we have completed the entire paper of June 2022. Please do more and more practice. This is the only advice I can give you. What you people do is, listen to me, what you people do is, listen to me, that you people revise whole course, and when you start doing the past paper, you feel that you are forgetting the rules. When you start doing the past paper, you feel that, oh, I have forgotten the rules. And you go back and revise the course again. What you need to understand is that if you will keep revising the rule again and again, if you will keep revising the course again and again, this is not the solution. Divide your time in 3 portions. Give some hours for revision and then remaining hours for the past papers. See what you study and what the past papers are. These are completely 2 different things. Even if you have studied the course very well, believe me, then also you would not be able to do this. Then also you would not be able to do this, because application is something different and learning the rules is something different. So divide your time, give some time to revision and some time to past papers. Okay. Normally the tax benefit is calculated through table format. That is more better. What if the property was non-residential? If the property was non-residential, then your allowed expense would be normal. Since you are a higher rate taxpayer, so you would have got relief at 40%. The relief is restricted on residential properties only, because the tax department do not like investments in residential property. They say go and invest in non-residential. Don't invest in residential, because otherwise you will make the houses expensive. So in residential, the relief is restricted at 20%. In non-residential, it would be simple 40% relief, since he was a higher rate taxpayer. Okay. So thank you, everyone. We are done with the day 3 and the entire paper of March, June 2022. In the next class, we'll practice one more question. Since tomorrow's class will be our last class, so we'll not be able to practice the whole paper, but we will try and do one big question in the next class, so that you will have more idea that how you have to deal with the exam situations. Thank you, everyone.